Hello, everybody. This is Hunter Satterfield. I'm one of the partners here at Keen Waters and Associates, as well as the Chief Investment Officer. As always, today I'm joined by my fellow partner, Brian Bortz, who is the head of our investment committee here at CWA, and Brad Sanders, the Managing Director of Tectonic Advisors. This is your May market update. For the month of May, the S&P 500 was up 5.3% just for the month, with global stocks up 5%, and then both domestic and global bonds right up 0.3%. Now, we've continued to see, obviously, an amazing year this year, which is on top of a great year in the markets in 25, 24, 23, all sort of bouncing off the issues that we dealt with in 22. We continue to see the broadening of the market this year, like we've talked about at length on this recording. Brad talks about it in his weekly message as well as the podcast. And our performance remains very strong compared to the broad indices. Brad, I do want to start with you and talk through a little bit, because now with another excellent month on top of last month as well, we are starting to see some numbers that are pretty staggering for the year in the market. And as we break down and sort of deconstruct what's happening in the market, there are these sort of pockets that are starting to get a little bit frothy, right? You want to talk a little bit about those and kind of what this market looks like, not just compared to, again, great broad performance, but inside the market where we start to see a little bit of froth out there?
Yeah, I think to your point, the broadening trend still remains the same, but what you've seen over the last several months is you've had software companies, call it March, April timeframe, kind of went through a period of re-rating where there was this AI fear, like, oh, they're coming for software, and you had the rollout of Claude and all of this stuff going on. That's just been completely replaced in the market by semiconductors. So you've had software go from a large percentage of the index. Those on average have dropped 20, 25, 30%. But you've seen semiconductors grow from 2% of the S&P 500 18 months ago to now 18%, which is a giant number. And we're seeing some crazy moves. There's one particular company that was a $65 billion market cap 15 months ago, so-called start of 2025, and it's now 1.3 trillion. And so we're seeing just some really big, to your point, frothy moves kind of around the outside and within certain sectors. However, the broader market stays relatively strong, and our portfolios are performing well. But you're starting to see some kind of like 1999 kind of moves in stocks where we're starting to kind of really get into this AI hype cycle. And anytime a company has earnings and they beat, they're up 20% that day. It's already like a big company. And so I think it's really important to kind of keep your wits about you here and to not really dive headfirst into that kind of market movements, because we had a 5 standard deviation move higher in momentum stocks in May. Momentum can change like that, as we've all learned multiple times throughout our career. And so you don't want to get where you have momentum only driving your portfolio. You want to make sure you're staying diversified and being kind of smart about what you're doing, particularly when you get into periods like this where you see like breathtaking moves in stocks on a daily basis.
Yeah, and I think a lot of what, Brian, to come over to you, we obviously see the headlines that are out there. We see some of these frothy things, and, it might be that some of our clients, we've gotten calls on those, start to get fearful and uncertain and anxious around these times. And, our performance has been excellent, again, market broadening and things like that. But like, what are you communicating to clients if they do have fear when we start to see these markets about how our philosophy is tried and true, et cetera, et cetera?
Sure. Yeah. It's interesting when you have those conversations because, people are always having the fear of, okay, we're doing really good, we're at record highs or whatever. And in our process, keep in mind that we focus on a repeatable process when we're selecting managers, when we're selecting funds, when those managers are selecting their portfolios. There's a repeatable process there. It starts with making sure that you're not overpaying for the stocks that you own. We look at a diversified portfolio. We have ways to protect our clients, and in our methodology is working not only in those times when there was a super narrow market, but as the market broadens, the market's coming to us as much as it is anything else. And so I'm really excited about where things are right now. I think our portfolios are not only just doing very well, we're also positioned to take advantage of where things are going forward. So I like where we are.
Yeah, I think we've got obviously a lot coming, listeners, as we've got a new Fed chair coming. We have IPOs coming this summer, continued change in the AI space as well. So Lots to look forward to, and sort of watch over the course of the summer. Hope you're able to travel, be with your family a little bit, and we will be back in front of you at the end of June. Thank you so much.